Anyone can buy the home of their dreams, regardless of their past or current situation. It just takes knowing what your mortgage requirements are and what you need to do. You may be complicating what you need to do to buy a home, so in this video, we're going to cover what you need to know and what your mortgage requirements are for 2019 to buy a house. Hey, it's Dylan here, founder of Smart Home Buyer and your financial prosperity and dream home expert. And I'm super excited to go over the simple requirements that you need to know if you're thinking about buying a home in 2019. So the number one is you need to know what your credit score is. And you need to understand that credit is a very important part of buying a home. Many confused and overwhelmed for some home buyers, they jump into buying a house and they don't think about where their credit is. They don't think about what the minimum mark has to be. And so what happens is you go to get pre-approved and you're forced into whatever loan that the bank wants you to get, and that's never a good thing. You want to be able to be the one that has the options. You want to be able to have, you want to be able to know that there's money going back into your pocket long term. If you have better credit, means you're going to get better financing terms. So number two is, what is your income, right? You got to figure out how much money you have. You got to know, how much money you have coming in, and what do you need to do, what loan option is going to be better. If I have a lower down payment, what loan option is going to be if I have a higher down payment. Generally, if you have higher income, you're probably going to have higher credit. You're probably going to be qualified for a different type of loan option. You're going to be able to get something a little bit with the more attractive financing terms. A good rule of thumb when you're looking at being able to buy a home and you're trying to figure out, what my income has to be, we look at all the debt that's on your credit report. So whatever you have, like student loans, credit cards, installment loans, we're going to take all of that, we're going to add it up. Whatever the minimum mark is that's on your credit, that's all going to be like a total amount. Let's say you have $800 in different loans and student loans, credit cards. We take all of those, add those all up, and that, let's say it's $800. We add that to what the monthly payment will be with your new house, and your income has to be able to support that. So typically a good rule of thumb is a 2-to-1 ratio. So you need to make 2 times the income of what all your debt has, added up has to be. And that's, good. That's not anything, that's not set in stone. That's not cut and dried. It doesn't, always work out like that. But, that's, for most people, that's going to be a good rule of thumb there to think about. Number 3 is, what actually price of the home do you actually need? Right? A lot of confused and overwhelmed for some home buyers will, if you're like most people, you want to just rush out. You've never bought a house before. Maybe you're renting. You're like, I'm going to go run out and get whatever the most expensive home is that I can get. And honestly, buying a house should help you build wealth. It should be helping you work towards where it is that you want to go long term. So don't get something that is the most expensive. Think about putting money back into your pocket. Yes, it's debt. Yes, buying a house is debt. Having mortgage payment is debt. But when you're renting, 100% of that is all going somewhere else. Whereas when you buy a home, at least a good chunk of that money is going back into your pocket. After you're paying your insurance and property taxes, and of course there's interest, but that's a big chunk of that is going back into your pocket. So it's just important to see that you don't have to go and get something that's super, just because you can afford it doesn't mean that you need to go out and buy it. That's a good thing to just think about. Get what's affordable for you so that you have money left over. This is a big thing. A lot of people make this mistake, and I don't want you to make this mistake. Make sure that you have money left over, that you can afford your payment and that you're able to invest it. I'm a big proponent of investing it, maybe starting a side business. Think about ways you can make that extra money saved in your pocket, go and grow your wealth long term. And that brings me to number 4 is down payment. What are your requirements? How much down payment do I need to have? There's a lot of down payment options available. So for most people, 3 to 5%. For many first-time home buyers, especially if you're like me, a millennial, you're looking in that 3 to 5% range, and that is going to be usually a good rule of thumb to shoot for. And the good thing with that is it's a low requirement. You can have like family member give you a gift, right? You can have someone give you money to help work towards that, to help you contribute that. So you can get into a home with just a little bit of money saved. You know, maybe you have some tax money set aside, or maybe you have $5,000 or $10,000 set up, and you're like, I'm tired of renting, and I want to go and I want to be able to get into a house. Now, I would not be doing a service to you if I didn't talk about down payment options, down payment assistance options. There are down payment assistance options available that can give you the money for your down payment. So, and I've made other videos on my channel that tell you how to get approved and how to buy a house with no down payment. And good rule of thumb here, if you live in South Carolina like I do, there are government assistance programs like Community Works and South Carolina Housing, but they're pretty strict on requirements. So credit for that is going to be a big requirement. Credit for those down payment assistance programs, you're going to have at least a 640. Some places advertise a 620. You try to get in with a lower credit score, and they just hit you with a longer list of conditions and requirements, and honestly, it's just more of a hassle for you. So shoot for a 640. Shoot for a 640. Got to make it easier to get that money. Like in South Carolina, you can get up to like $6,000 down payment assistance. The last number 5 here. What do your debt ratios have to be? That's important to know, and we kind of touched on that in step number 1. But debt ratios are important. Debt ratios are important. We take all of that debt and we add it all up, and it's got to be under a certain mark. Now, it's important to know where all your debt is, because before you can go take on more debt, we just need to know that you're in a position to be able to afford it, that you can pay it back, that you're not going to be scraping for cash, digging through the couch, and all of that stuff. So your debt ratios are important to know, to make sure that you've got everything under control and that you're able to get into your home, that you're able to grow prosperously and financially. So that's it. Hope this video helps you know what your mortgage requirements are for 2019. If you have any questions, hit the link in the description and you'll be taken to my home buyer assessment survey. So we can ask you a few questions, let me get to know you, understand what your needs are, and we'll schedule a time to get on the phone. We'll talk about what you're looking for, what you need to do if you are thinking about what doing. Buy a house this year, I just don't know what the next steps are. Go ahead and click the link there, and I'll talk with you soon.